What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC up over 30% for the week, closing finally the entire week out over $20, getting a little action after hours and into the close was good to see. So the market makers really couldn't pull us down like we've seen so many times happen on a Friday. In this video, I want to talk about two things that are happening, not only specifically with AMC, but the entire sector, which can be very bullish. So one of the things we're going to talk about, the information was just updated yesterday, so it is the most accurate to what is currently happening right now. We're going to cover everything. Let's get right into it. First off, take a look at this chart. We had some great movement Tuesday and Wednesday, a little bit of stagnation Thursday and today, even though we did get a little pop coming into it. But as you can see, we're holding. All right, this chart does look a little bit different. You know, and you've seen this numerous times before, that the chart was very similar. We're getting the rips at the open and then just massive hard selling pressure and shorting going into the close, especially on a Friday, knowing that $20 was a big psychological level, as well as market makers are really trying to pull some of that price down. It held very well. But let's talk about the two catalysts I see that are positive for not just AMC, but the entire sector. So if you guys remember, in a video I made a few weeks ago, and I also did tweet about this as well, I said that you're starting to see some of these small cap stocks heat up again. And if you look over here in my upper left-hand corner, you can see some of these big percentage gainers. Even this one right here was a massive push into close. Okay, this one ran a total of over 150% on the day. And there's been numerous other ones, okay? Once November kind of closed out last year, you really saw these small caps starting to slow down a little bit. And I've mentioned numerous times before that the market runs in cycles and wait for that to kick back up again. Okay, so you're starting to see some of these small caps run. And here's another sector that popped, all right, and even going into close as well, especially Tilray, we played that a few times. All right, the entire marijuana sector getting some good action. The federal marijuana legalization bill is officially scheduled for House floor vote. Tilray had a massive bullish candle on the daily chart, as well as one of the highest volumes it's ever seen. All right, be careful if you are going to play this into next week. Just remember, it could be a, buy the rumor, sell the news type event. Still might get some action off of it, okay, because there is the options chain available. But this is bullish, not only directly for AMC, but just the fact that it's going to start to shift investors' mindsets, all right, of playing these heavy blue chip stocks, okay, and go back into the other sectors that have slowed down a bit, all right? When you saw, crude oil pump up to $130 a barrel, one of the stocks, INDO went from like $4 all the way up to $80, and you're starting to get some of that shift, and they really start to narrow down on some of these sectors that people have left alone for a little bit of time, all right? And that's where the meme sector, okay, or anything has a high short interest is really going to get some target, which is a good sign, obviously, for AMC. The next thing I want to talk about, which directly relates to the entire, all right, financial system, is take a look at SPY, all right, the S&P 500. We're gonna go look at a daily chart really quickly, and I'll get into that other diagram. But we've watched this channel, this downtrend channel that we've had all the way from we hit highs 480 at the start of the year. It's slowly breaking away. Okay, now there is a bullish, sign when you're looking at this chart. It is smoothly uptrending. We're above all the indicators right now. We're making higher highs. One thing I will point out, and I'll zoom into this, and I know other people have talked about this as well, is we have, decreasing volume on increasing price. And that is actually a bearish sign. And I have mentioned there's a lot of money still on the sidelines, okay? They're waiting for a little bit more direction. However, this pump does need to breathe a little bit. Here's where things change and what I focus on. So last year, okay, actually in 2020, when the coronavirus hit, all right, and the Federal Reserve basically said, pump out as much money as we can. We got to stimulate the economy. We're dropping rates pretty much next to zero. Once you saw a massive decline, it was like 35% drop in the entire market. Investors basically went to their funds and just said, listen, I need everything I can borrow. I'm going to pump it in the market. And that's why you saw a massive amount of margin debt. All right. Well, this also does coincide with everything, when it comes to short interest. Okay. When it comes to borrowing a stock, paying a fee on it. All right, that's all done on margin. Okay, and when you look at this chart, which is the most up to date, it just came out actually yesterday, all right, the 24th, you can see that the margin debt is massively decreasing. Okay, and we've seen some screenshots on Reddit, on Twitter, all right, talking about how, I remember in the Bloomberg terminals saying, listen, you need to make sure that you're not lending out, you're not over leveraged, okay, and you're within your risk tolerance. Sorry, guys. Also, with everything that is obviously happening over, all right, in Russia, all right, in their own financial crisis that they're going through. But take a look how much margin debt has decreased. Now, a part of that will, yes, pull capital out of the market, which is probably why you're seeing this pump happening at a little bit lower volume. Mind you, there still is a lot of money on the sidelines, but it really, skews the risk to reward ratio. AMC is not sitting at $72 like it was, okay, and when it ran 300% in just a few days, where that kind of is enticing to short. If you are a big fund looking to short a stock, it ran 300%. Okay, naturally that's one you want to buy. It's the same thing like you and I when you see a stock that is pulled down. When AMC was sitting at 13 bucks, all right, and it's just oversold, and you're looking to buy it. It's exactly what shorts do on the other side. But their risk reward is really getting skewed, especially at this price level, and they don't have the accessibility, all right, and the leverage to be able to continue this going forward. All right. So now, like I said, this is a really big decrease in a short period of time. Okay. Obviously, this is over 20, 25 years right now. All right. So, the downtrend does look very quick on the chart, but like I said, it is over the past few months. But look for that maybe to cool a little bit, especially the fact that, the Fed has raised the rates. It's up 25 basis points. They're looking to continue to do that. All right, depending on, how much liquidity requirements is needed, it's going to be hard to be able to continue the path that they were on for the last 2 years going forward. All right. And this chart really just shows proof of it all. So guys, that is it for this video. Enjoy your weekend, and I'll see you in the next one.